been maintained. The gross NPA has come in at 0.46% versus 0.41% on a quarter-on-quarter basis, while the net NPA has come in at 0.13 versus 0.12% on a quarter-on-quarter basis. Yes Bank is a relatively small bank and its asset quality has been fairly stable for the last many quarters. So gross NPA below 0.5%, is substantially better than what peers are reporting. The provisions have come down on a quarter-on-quarter basis. So from 126 crore, it's come down to 98 crore. But overall, a 22% growth in the profit, a 42% growth in the NII, although it comes in on a smaller base compared to peers, is still relatively healthy, and it seems better than what the street was anticipating. Some flashes are coming in where the restructured assets stand at 567 crore on as of this quarter. I think as per the previous quarter, the total restructured book was at 381, and now we're getting a figure of 567 crore, which has been the total restructured assets as of this quarter. There has been no sale to ARCs in Q1, so these are some more details which are coming in. The stock is holding up with a gain of nearly about 2.5%. In just a bit, the management will address the media.
It's correct, and the stock has been in focus for various other reasons as well. Remember, UBS did come out with a report saying that the company has a lot of exposure to toxic assets, and because of which the stock did fall as well. The management did speak to us and clarify to us that those reports were baseless, and the stock managed to recover some of those gains. But in today's trade, holding up with good gains after a lot of numbers that have come across from the banking sector. But let's cut across to the management. They're addressing their numbers.
Observations on the macroeconomic developments particularly pertinent to the banking industry and Yes Bank, and we will move on to discussing our results for the current quarter. As you will be well aware, the Reserve Bank of India has taken a rate cut decision in the quarter gone by. The repo rate has been reduced by 25 basis points on 2nd June. That resulted in most banks, including your bank, cutting both deposit rates and lending rates. So we have seen a base rate reduction of Yes Bank in the current quarter by 25 basis points as well. We are also observing the satisfactory performance of monsoon, and therefore believe that the benevolent effect of both falling global commodity prices and so far satisfactory monsoon will have a soothing effect on inflation as well as on the investment outlook in the economy in general. And we do expect more rate cuts to also be delivered by the Reserve Bank of India in the current financial year, maybe between 25 and 50 basis points. We are also seeing healthy consolidation in the fiscal deficit as well as the current account deficit position of the country, especially helped by fall in crude prices and a recent fall in gold prices as well as steps taken by the government with direct-to-bank credits for subsidy reimbursements to the population. We have also been observing moderate improvement in the economic backdrop in general, not completely broad-based, but we are seeing signs of improvement in the economic activity. We are expecting the GDP for the country this year to close at a number close to 7.8%, which will be a 50 basis point improvement of last year's GDP of 7.3%. In this backdrop, Yes Bank is reporting a reasonably strong growth on its loan book of 35.1%. The bank's loan book now stands at 79,666 crores. This was little less than 59,000 crores same time last year. The loan book continues to be diversified across many sectors, and especially it is now benefiting from growing business in both the retail as well as the SME segments. Recently, the bank's growth was particularly benefited by activities in the renewable energy segment, in the agriculture, telecom, technology, media and entertainment segments, which has contributed significantly to the recent growth of the loan book. On the deposit side, the bank is reporting a 25% increase. The total deposit book is now 95,316 crores. That compares to a 76,000 crore number same time last year. Within deposits, the bank is reporting a healthy 31% increase in the CASA book. That now stands at 22,000 crores plus. The CASA ratio at 24.3%, which is an improvement over last year, when we reported a CASA ratio of 22.3%. Within CASA, the savings account deposits grew very sharply. We are reporting a 46% increase in savings account deposits on a year-on-year basis. The total book now stands at almost 14,000 crores as compared to 9,500 crores in the same period last year. The total deposits from retail and CASA segment now stand at almost 52%. This is also a 7 to 8% mix improvement from same time last year, and has been backed by a 48% year-on-year growth. So very healthy outcomes on deposits and on growth fronts. On the profit and loss side, the bank is reporting a net profit after tax for the current quarter at 551 crores. This will be about 28% growth on year-on-year profits. This has been supported well by both a robust 42% growth in NII, which is now reported at 1,060 crores for the current quarter, as well as a 32% increase in non-interest income, which has been coming steadily as the bank has been growing its business. The bank is also reporting increased margins. So we have reported a 3.3% net interest margin position in the June quarter. This was a 30 basis point improvement from last year, where we were reporting a net interest margin position of 3.0%. The yield on the advances book that the bank is holding is now short of 12%, and our cost of funds are now stand at 7.6%. The profits of the bank have contributed to a return on assets position on an annualized basis of 1.6% in the current quarter, and a return on equity position of 18.4% in the June quarter that ended on the 30th of the month. Spending a couple of minutes on the asset quality position as well. I think bank continues to report resilient performance on asset quality indicators, and many of them. The gross NPA ratio for the bank is being reported at 46 basis points, that's 0.46%. And the net NPA position of the bank is being reported at 13 basis points, that is 0.13%. These continue to be very modest and healthy numbers given the backdrop of economy and the business that the banking sector has been facing. The bank has incurred no sale to ARCs in the last quarter. The restructured portion of the book now stands at 71 basis points, that's 0.71%. There has been some addition to the restructured assets in the current quarter, particularly related to the roads sector, on account of delay in the commencement of the project. So the total restructured book of the bank stands at 71 basis points, so 0.71%. These delays in projects are only operational. The projects continue to be under development, and as the projects are completed, the asset quality position on the restructured book should restore to normal as well. On the provisioning side, the bank is continuing to keep a healthy specific loan loss provisioning coverage, which stands at 71%, which means that the 71% of NPAs have already been provided for in the bank's P&L. During the current quarter, the bank has incurred a total provisioning of 98 crores, which was roughly equally split between provisioning for NPA as well as that for general loan loss purposes. The bank also continues to maintain its contingency provisioning, which stands at 50 basis points to the total loan book, which is in addition to the general as well as the specific loan loss provisioning that the bank has been making on its regular business. This is over and above what the statutory provisioning is mandated by the regulators. A moment on the capital position. The bank is reporting a total capital adequacy of 15%, and within that a tier 1 capital adequacy ratio of 10.9%. The total capital funds are almost 17,000 crores as at June 30th, 2015. This is after a 554 crore raise of Basel III compliant Tier 2 bonds that the bank completed in the first quarter of this financial year. The liquidity coverage ratio position of the bank, LCR as it is also referred to, is at 77%, which continues to be pretty healthy, where the minimum regulatory requirement is 60%. This ratio could have been better. However, some of the guidelines on LCR have been tightened by the regulator. So therefore, the comparison of LCR is not necessarily like for like. The bank had reported an 80% LCR in the previous quarter. So there is a small correction. However, that's on account of largely the tightening of regulations. A few moments on the expansion and other initiatives that the bank has taken up in the last quarter as well. So we are happy to report that the bank has received the approval from RBI to set up its offshore branch in the GIFT City. So the international banking unit will be set up in the GIFT City. That will be equivalent to an offshore branch that banks in India can run. The board of the bank has also approved a maiden $1 billion MTN program to be initiated under the IBU GIFT City branch. So the bank will now proceed to set up this $1 billion medium-term note program to start the funding business for the overseas branch as well. In general, the branch should be able to significantly increase the international banking offerings as well as the cross-border product offerings of the bank for its customers, including arranging financing for overseas subsidiaries of Indian companies, providing foreign currency funding to Indian companies' Indian operations, and all of the international banking suite of products should be further helped by by the international banking unit. The bank is also happy to report the receipt of the license for a primary dealership. So the bank, as at beginning July, is now also officially a primary dealer and would be underwriting the auctions that the Government of India will be conducting for issuance of its debt. And this helps the bank move closer to its position of becoming a complete rupee debt house, as we like to call ourselves.
All right, let's address the